Over the past year or two, you can see how the market has moved sideways after a good strong uptrend. Now this consolidation is over and it looks like we've broken out into wave 3. Now that's what everybody can analyze, but where does the advantage of a candlestick analysis come into play? The candlestick investor can take advantage of that sideways move by making money on the short side in these downtrends and making money on the upside in these uptrends. But more importantly, knowing that this was a J-hook pattern, that wave 1 and wave 3 being the equivalent to wave 1 was going to break out through this resistance level, now putting us into a new uptrend. When examining the NASDAQ chart in conjunction with the Dow and the S&P 500, again, there's that J-hook pattern implying there's going to be a lot more upside breaking out into new territory. Knowing the trend of the market allows the candlestick investor to take advantage of the patterns that are setting up, knowing that a bullish trend is going to enhance bullish pattern breakouts of individual stocks. Tesla, for example, had a nice fry pan bottom breakout, then went into a J-hook pattern. So you knew when to get in, you knew when to take profits, and you knew when to get back in, making this an excellent entry and exit strategy, especially if you're trading leveraged positions such as options. When you can analyze the big traders like Nvidia, Netflix, Tesla, and they're all moving in bullish directions based upon the patterns that we can recognize, the J-hook pattern. That gives us the advantage of not only knowing two things, one, each individual stock chart working well, but assuming that the uptrending market is still going to remain in progress because there's no real evidence of selling going on in the major stock. Apple is a very good example. The uptrend in Apple has remained consistent. There was your profit taking, there was your buyback, there was your breakout of this little slow curve. As long as Apple continues in an uptrend, it has to be assumed that the overall investor sentiment of the market is still bullish. When you apply the information that is built into individual signals, such as the kicker signal, notice it opened here, closed here, then gapped up the next day above where it opened the previous day and went the opposite direction, telling us that the investor sentiment had been kicked in the opposite direction. That allows for high profit trade setups. Because candlestick analysis is the graphic depiction of investor sentiment, it allows us to take advantage of pattern breakouts. Like a fry pan bottom breakout, we know what the expectations are on a fry pan bottom breakout, a strong price move. We can also analyze the individual signals in that trend, such as profit taking and then a kicker signal telling us there's more upside, or a belt hold signal that tells you the balance of supply and demand is offset, where the sellers panic sold and the bulls sopped up all the selling, implying there's less selling going on. So any buying from that point is going to run into much less resistance. In the numerous methods of trading on a technical basis, like trend channels, the candlestick investor has the huge advantage of seeing exactly what happens at the top, where the buying occurs at the bottom, the selling at the top, the buying at the bottom, putting you in the right direction at the right time, such as in this Amazon chart, that when you once you recognize a channel, there was a pretty good probability that buying down in this area after buying right here off the bottom of this channel, that it was heading to the top of the channel. Exceeded it. That's the major advantage of candlestick analysis, that it puts investors in a position where they can take advantage of knowing what the direction is and occasionally be put into a situation where that direction is going to exceed expectations. We're going into the next year as far as a bull market. That doesn't matter. The advantage we have as candlestick investors is we can analyze what the market is doing right now, when there's profit taking, when the profit taking has stopped, so that when everybody tells you you can't time the market, the Japanese rice traders proved over hundreds of years that you can time the market based upon seeing the buy and the sell signals created by investor sentiment. That'll be it. We'll see you in the chat rooms.